Wait while you are joined to the conference.
Land, Colombia, etc. Our export business has grown up by 46% year on year. In India, we have been able to penetrate further into the market, and our business has grown up by 30% year on year basis. It's over 30%. The implementation of the new R&D center is progressing well, and it should be operational in the Q2 financial year 23. New facility for the manufacture of disinfectants, oral hygiene products, oral care products, biomaterials is under the advanced stage of implementation. Hopefully, the new facility should be fully operational in the Q3 financial year 23. The outlook for the dental industry is very optimistic for India. Various independent studies have indicated that India is set to become the single largest country for dental equipment and materials. Further, these independent studies show that Indian dental market is expected to grow at an unprecedented rate of 20 to 30% year on year. The top impacting factors for the growth of the dental industry in India are growth in the dental tourism due to low cost of treatment. Second, surge in the demand for dental cosmetic procedures, increased focus on establishing medical specialty hospitals, then the increased awareness of the oral health and hygiene, increased economic growth, increased healthcare spending, increasing aging population. The growth trend for the international market is equally impressive. Our export business in the past 5 years indicates about 30% year-on-year growth. As part of our growth strategy in the financial year 23, we are going ahead with our plan to expand our business in USA, Brazil, Canada, which are very promising markets for our products. For selling dental products in these countries, MDSAP certificate is required, and I'm happy to inform that our company is the first Indian dental company who has been awarded with MDSAP certificate. We are also going to attend dental exhibitions in various countries to showcase our products, to generate business interest, business contracts that will help us to grow our export business in the coming years. We regularly showcase our products in the dental exhibitions in India also. That helps us to create brand awareness and increase our customer base. With all these efforts, we are very confident our business will go further in financial year 23. I also want to add here that new product range to be introduced in FY23 will also contribute to increase our top line and bottom line. I thank all the investors attending this conference and also for unprecedented and overwhelming support to our company during its growth journey. Now I'll ask Mrs. Mamata Modi to present the financial results. Over to Mrs. Mamata Modi.
Thank you, Mr. Modi. Good evening, ladies and gentlemen. It is an honor to present the financial highlights which depict the current performance and growth trajectory for achievement of future goals. For financial year 22, the company's revenues stood at rupees 3,973.5 lakhs versus rupees 2,951.35 lakhs in financial year 21, and PAT of rupees 1,156.88 lakhs versus rupees 720.67 lakhs in financial year 21. The company saw 35% growth in revenue and 61% growth in profitability over financial year 21. Further, cost of material consumed were reduced by 2% compared to financial year 21, which incrementally contributed 8% to 10% to the company's bottom line. For financial year 22, the company's EBITDA stood at rupees 1,667.97 lakhs versus rupees 999.42 lakhs in financial year 21, thereby registering a growth of 67%. For financial year 22, the company's operating profit margin stood at rupees 1,483.95 lakhs versus 94.94 lakhs in financial year 21, thereby registering a growth of 64.71%. Finance cost has also reduced by 44% during the financial year 22, and in the financial year 23, we are sanguine that finance cost shall reduce further. During the financial year 22, asset turnover ratio has further improved to 5.91 as compared to 5.50 in financial year 21. We continue to invest in the company's growth, which is evident from the growing balance sheet size. For the year 21-22, company has invested total 700.12 lakh towards capital investment, which includes investment in research and development of rupees 189.93, and the capital work is still in progress. As at March 2022, and the company has a strong total asset position of rupees 6,415.94 lakhs compared to rupees 3,067.66 lakhs as at March 21 end. It is apparent from our financial figures that both top line and bottom line registered impressive year-on-year growth. With a strong business fundamental and receding COVID-19 wave, we have a positive outlook and very optimistic view for good performance in financial year 23. Once again, I thank you, all of you.
Ma'am, should we start the floor for questions and answers? This is the operator.
Yes.
Should we start the floor for questions and answers?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Pranay Jain from Dealwell Capital. Please go ahead.
Thank you for this opportunity and congratulations on a strong year. I had 2-3 questions, and I'll start them first with the important developed markets such as US, Canada. So the certifications and the approvals that we have received for the products, wanted to understand what is the kind of launch plan for these, and also the new products and revenue contribution we can expect from our export markets, which account for nearly 2/3. So out of 37-38 crore revenue in this year, if 2/3 came from exports, what can we look forward to from the important markets and export pie this year?
Good evening. Mr. Atul Modi, Managing Director of the company. I will give reply to the query. Already we have registered 5 products in the last financial year, and in the beginning of this year, another 5 products have been approved by US FDA. As of today, we have 9 products cleared by US FDA. That's a big achievement for our company. Now we are preparing our plan for the launching of these products in the US market. Because, with US FDA certification, another certification which is required for export to US is MD certificate. And our company is the only company from India which has been granted the MDSAP certificate. With this certificate, now we can explore the US market in a better way. We can explore the Brazilian market, Canada, because all these countries require, in addition to their country regulations, they also require MDSAP certificate. And we are fully equipped to launch our products in these three countries. We are now we have formed a strategy of, launching these products in these countries. We are, going ahead with our plan to visit these countries and showcase our products in the different exhibitions which are going to be held in US and Brazil and Canada. So we have already charted out a plan, and we are going ahead with our plan to launch these products and showcase these products on a forum where we can have a direct contact with the buyers, and we can show them the products, and we can, start this process of marketing. So this is the plan already in place, and we are going ahead with our marketing plan. We are very confident that these three, countries are the biggest international market places for our products. And we will. Hello.
Yes, I'm listening.
So we are focusing on these three countries because we are expecting around 10% business growth from these countries in FY23, besides the normal growth which we are already getting from other countries. So it is expected that we'll have a good business from these three countries in this financial year and in the coming years. We are very hopeful of business generation from these countries. There's enough potential, and these are very vast markets where we can sell our products very comfortably.
Got that. So US, Canada, Brazil, and maybe Saudi Arabia, if I include that, revenue or sales for products in these markets, you think will start from this quarter itself, or could it take maybe Q2?
Already we have started our sales in Saudi Arabia on a trial basis. We have received 3-4 orders from Saudi Arabia distributor. They are evaluating the products, and the market response is very good. We are hopeful that we should get at least $1 million business from Saudi Arabia itself. That's a huge market for us. That's our expectation from Saudi Arabia. And we have yet to start our business operations in USA. And now we have got more products approved. We have bigger portfolio to offer to the US market. And, with all these products which have been already approved by US FDA, we are very confident that we will get good business from US and other countries.
And any difficulty we have seen in Europe, or any disruption due to the...
Because there was a slight disruption in the Jan to March quarter because, of the Ukraine-Russia war. But, as we have around 20% business coming from the European countries, only 6% business comes from the CIS countries. And, just for 1 month, there was, payment problems to our customers. But then finally they managed, and now our business is back to normal in these countries. And the effect of war is also diminishing, and the business is now back to normal, and business is increasing in these countries is normal. So we are not experiencing any serious issues in the EU countries. It was just for 1 month there was some disruption, but now it is back to normal.
Okay, so order flow was not really affected, only payments and as you are saying, payments and new orders are all as per normal growth now.
Yeah, orders were there. We did not execute the order because of the payment, because as a company policy, we execute the orders only on 100% advance payment. So we had the orders, but there were some sanctions on some banks, who were dealing with the Russia. So for that reason, they could not send the payment to us before 31st March. And that is why in the last quarter, our, sale was impacted. But finally, those orders were rolled out to April and executed in April. They will receive the payment. Yeah.
Understood. Also, I see that in Q4, raw materials as a percentage of sales has sequentially increased compared to Q3. I know many businesses have experienced this across sectors. So just wanted to know, will these prices and this 27-28% raw material as percentage to sales, should that be considered as a base near term, or raw material prices have now begun to soften and margin should improve after Q1?
We have enough stock for the 6 months period, because we anticipated during the COVID time that because of the logistic reasons, the supplies could be disrupted. So we visualized, and we, because of this situation, we had built up the inventory, and we are comfortable with the stocks, and now the prices are going down. It's becoming normal. Logistic costs are also falling, and there is absolutely no problem with the prices. We are maintaining prices. Our profit margins are intact. There is no change. We are maintaining the same level. So we do not foresee any impact of the prices on our product cost and our profitability.
So have we taken any pricing actions or hikes to pass on this increase recently?
We have increased our prices in the last financial year, January. The impact of the prices will come because we gave them 3 months advance notice for increasing the prices, and now the effect of the price increase will come from April onward. The new prices will be effective in April in this quarter. So we gave them the prior intimation that we'll be revising the prices in the next financial year. So new prices are effective from April 23.
This is for new orders only, right?
Yeah, new orders.
And otherwise, there isn't any need for any pricing action near term, at least. Things look stable, you're saying.
See, we had the stocks, so we were comfortable to execute the orders at the old prices. So a little impact of the price increase has been passed on to the customer. We have increased our prices, and they are accepting the prices, and our new supplies are going at the new prices. So there is no problem with regards to the pricing of our product. It is acceptable to all over worldwide.
Okay. And with regards to shipping, freight, logistics costs, which have been on an elevated trajectory, and even now many companies are saying that container rates remain firm. What's the outlook that you are seeing for your markets? Are we able to pass those inflationary elements fully, or do we have to absorb some?
See, our buyer bear the cost of freight. We don't bear it. So whatever is the cost of freight, it is added to the invoice, and they pay it. So it is for them to decide whether they want to take the shipment by air, they want to take the shipment by sea freight. So they decide, and we execute according to their instructions. So that arrangement they have to make. They appoint their own they nominate their own shipping agents. So they negotiate with them, and they decide. So we are not responsible for the freight part for our customers. They decide themselves, and if we decide, we tell them, and they accept. So that is not affecting our business at all. And our raw material supplies, We know wherever there is an increase in the freight cost, we move the shipment by sea. If there is no impact of the freight cost, we move the raw material shipment by air. So that is our logistic planning, and we are effectively and efficiently planning our raw material supplies so that it doesn't impact our cost of production.
Thank you. Mr. Jain, may we request that you return to the question queue for follow-up
Sure.
questions? Thank you. The next question is from the line of Satwik Jain from Generational Capital. Please go ahead.
Yeah, thank you. So I was reading that we expect our new capacity to get fully operational by Q3 this year. So is it right to assume that we'll start, generating revenues from there? And what is the timeline which you are expecting by which, we will go to 100% capacity utilization for the new capacity? So this was the first question. And the second one was, so are we increasing any terms of credit to, the people who are selling to, basically, because I was seeing that, our operational cash flows have weakened a bit. So these were my two questions.
Sorry, I couldn't take your question. Can you please repeat?
Yeah, sure. So the first question was basically our new capacity is getting functional in Q3 this year. So what is the timeline which we are expecting for 100% capacity utilization? So this was the first question. And the second question was, I was seeing some weakening of the operational cash flows, if we see on a year-on-year basis. So are we, doing some lenient terms of credit to the people who we are, selling our basically goods to?
We are not giving any credit to any of our customers. As a company policy, we do not give credit to any customer in the export market. We do business either on LC or 100% advance payment basis. We don't give any credit. So this is one thing, so it doesn't affect our cash flow. Second thing is that our new capacity, new facility will be operational, is expected, and hopefully it will be operational in Q3. And it should start generating, revenue in this financial year after Q3, but the generation will not be more than 10-15% in this first year of its operation. But year-on-year basis, we are expecting that in the next 4 to 5 years, we should reach to about 70-80% of capacity utilization. But in this financial year, because we'll be operating only for 1 or 2 quarters, so we cannot generate much revenue from the new facility. So definitely, it will contribute to the revenue in this financial year. It is expected. And if everything is favorable, if all clearances of the government, if everything is favorable, then definitely it will contribute to the revenue generation in this financial year.
Okay, that was very helpful, sir. And so just one recommendation to the IR team probably, that if you could include the year-on-year numbers in the investor presentation, or say the release which gets basically for the quarterly comparison. So that would be very helpful to the analyst community.
Okay, we take note of your advice and we'll try to follow it. Wherever possible, we'll give year-on-year, quarter-on-quarter and utilization.
Thank you so much.
Thank you. The next question is from the line of Samir Palod from AUM Fund Advisors. Please go ahead.
Yes, hi, sir. Can you hear me?
Yes, sir.
Yeah, hi. Congratulations on a good set of numbers. Sir, more a strategic question. Given that it's such a large market, the dental products market, especially in advanced economies, what is stopping us for growing much faster? Like, I understand you will say that we've grown fast, but that is on a very small base of about 35-40 crores of revenues. What does it take, for this company to grow multifold and get to 100 crore turnover by next year or in 2 years' time? Is it the lack of capacity today, or is the sales process little slow? you have to go for these exhibitions, showcase your products by the time you get the orders. So I'm really trying to understand, given the positioning we have quality, we have the approvals, and we have cost competitiveness. Why can't we, grow multifold? What is the sort of hindrance to enable you to grow 2, 3, 4x from here in a very short period of time?
First of all, I would like to clarify that we have enough capacity. We are still operating at single shift basis, and there is no problem of quality. That this no capacity, we have enough capacity. 2 years back, our revenue was 20 crores. Today we are close to 40 crores. So the company is doubling its revenue in 2 years. So we are very confident that this pace of growth will continue and it will further accelerate. Now we have taken time to establish the products, to get all the certifications, approvals, quality system, quality management system, research and development activity. Everything is now in place. Infrastructure has been built. Now we are focusing on the marketing. So that is already, that marketing strategy has been, established. And we see that our company is growing more than 35% in every year-on-year basis. While other companies, multinational companies in India, their growth is not more than 3 to 4%. So we are very confident that with this pace of growth, our business will be much more accelerated in the coming time, and our brand value will increase. Our branding, our marketing activity are now under focus, and we are going ahead with participating in a large number of dental exhibitions in the national and international market. For 2 years, we couldn't, attend any international or national exhibitions, were also not held. But now everything is open. We have already planned our strategy for showcasing our products to different countries, in different countries, and also in India. So we are proactive in marketing, and I'm very confident that our business our numbers will be much more impressive than this year. So this is our plan, and we are very confident that we'll be able to execute it.
So, sir, is it fair to say that currently you're at 40 crores, in 2 years you've doubled? In the next 2 years, again, you can double from 40 to 80, and the 2 years thereafter, again from 80 to 150. Is it fair to say that that sort of opportunity, given that now you have capacity and you've built the marketing network and now you're able to travel and all that, would it be fair to say that this growth rate will be maintained over the next 3-4 years?
Definitely, it will be better than this. This is our expectation. If everything is favorable, if all the market and there's no unforeseen situation, we are definitely bound to grow at a much faster pace. Here, everything is in place now. A state-of-the-art factory is ready. R&D center is under development. In another 1 or 2 quarters, it should be operational. So once everything is there, our entire focus will shift towards the marketing activity. Already our marketing team has made prepared a strategy for the marketing, and we are working on it. We have employed more people in the sales department for marketing. So we are going to have a lot of marketing activities that will accelerate our business growth. And this level of growth will be maintained and it will be improved. This is expected, the way we are working and the way we are going ahead with our, marketing strategy.
So my second question is, given all these increase in travel and marketing activities and participation in exhibitions, etc., will there be a pressure on margins in this coming year because you're sort of effectively building for the future. So is that likely that there could be higher expenses in FY23 with all the marketing activity that you're talking about?
So we have, in the IPO, we have kept a provision of 5 CR for the other expenses. This provision is for the marketing expenses, and we will utilize these expenses for this purpose. And there will be no effect of this, expense on the profitability in the next 2 years. And we have Mr. Vinay Jamal. He will give you further, reply on this matter.
Good evening. As for this question concerned, you were saying about the increase in expenditures with respect to our exhibition expenditures, traveling and congress and marketing. Definitely there will be increase in expenditures, but what we expect with these expenditures, we are going to accrue the benefits in the coming year. This year, in a very short percentage, but in the coming year, we are expecting to have a very good return with respect to expenditures that are about to be incurred in these 2 years. And we are very hopeful that profit will be much higher as compared to the rate of increasing such expenditures. Thank you.
No, but will you be able to maintain the margins that you have in this year despite the higher expenses, marketing expenses in the coming year?
Yes, of course. If you see for this year, if you come for the year or for the half year itself, there is a minor increase in the cost of goods around material consumed. But in the coming year, cost of raw material is also reducing as compared to the current rate. One thing. Second, now we are exploring the new markets where the rates, we are very conservative with such rates. Now, as we are moving to a different country, and if we compare our rates with the other competitors, we are very at a lower level. So, but our quality of our products is at par or better than our competitors. So the price increase in terms that will go to increase our sales, and the margins will management very much thinking that the profitability is going to increase irrespective of the increase in these expenditures in these 2 rates.
So you think you will be able to maintain the margins? That's effectively what you're saying.
Yes.
Okay, sir. Thank you for your answers.
Thank you.
Thank you. The next question is from the line of Akash Zaveri from Perpetual Investment Advisors. Please go ahead.
So thank you so much for the opportunity, and congratulations for a great year gone by. So just a couple of questions that, since our focus is so much on export markets, in these international markets where we are present, what exactly is our moat? Do we compete on cost, or do we compete on quality, or what is our right to win in our export markets?
We compete on price and quality both, because most of the manufacturers are located in European countries. Their prices are very high. And being a company from India, our cost of production is comparatively much lower. And we definitely compete with the multinational companies worldwide on the basis of the price. As far as the quality is concerned, we have the same quality parameters. We comply with all regulatory requirements. We comply with all quality certificates equivalent to the multinational companies. So we have the price advantage, and that is, is the driving force behind our success in the international market.
Got it. Thank you so much for that. And, coming to the domestic market, from, channel checks I've done with some dentists, a lot of them in metro cities, still prefer imported products and, swear by them. And for their outlook, even though we might have the same quality, But in the thought of a dentist, it's always that an imported product like a 3M or a Dentsply Sirona or a Shofu Dental would probably do better and solve their problem better as compared to an Indian manufactured product, even though as such we might have the same quality and certifications. So how is it that we can change the minds of these dentists and push them more towards Indian products? Because again, what I've gathered is that our products are the most value for money products that are there in the market. But how do we change the perception of Indian dentists to use our products versus like a 3M or one of our other competitors?
We are trying our best. The mindset of the user is very difficult to change, but we are doing our best, to compete with them. And there is a definite, you can see from the numbers, you can see the domestic sale, our business has grown by 37% in this year. So it is all possible because the acceptability of the product is increasing in the Indian market. Dentists are using our products. So it is growing at a rate of 37% in this financial year 22. We are making all efforts to increase our brand value by showcasing our products in different exhibitions, visiting different universities. So this is what we can do. The companies we are talking about, 3M, Shofu, they are all multinational companies. They are big corporates. They are flush with funds, so they can throw their money in promotion of their products. But being a small company, we do not have that kind of free flowing funds, for spending on the marketing. So we have to have a very conservative. We have a very shoestring, a budget for the marketing, and within that budget, we are operating and we are growing at 35%. And we think that it is a good achievement. If you talk about Shofu and 3M, they may not be growing at more than 1 or 2%. Because 2% is a very high growth rate for them, for India. And we are more than 35% growth. So you can say that we are in race with them. We are much ahead of our growth. So this is a very satisfying situation for us. We are very happy that our products are becoming more and more popular. It will take some time, but we are growing at a much faster pace than what we were doing 5 years back. And our growth rate will further increase in the coming years. Definitely we will overcome and we will cross Shofu and 3M one day. That is our dream and vision.
Sure. Thank you so much. And on one of the previous calls, you had mentioned that, our focus is on the metro cities as well as tier 2, tier 3. Would it be possible for you to give a split of our domestic revenues? How much comes from metro cities and how much comes from tier 2, tier 3 towns?
At present, our major contribution is from the metro cities. And now we are moving towards the class T1 and T2 and T3 cities. We need a much bigger team to penetrate into the smaller cities. So at present, our focus is on the major cities, metropolitan cities, because the density of the dentist and the patients is more in these cities compared to the small, and their paying capacity is also more in the metro cities. So our focus had been on the metro cities only, but now we are moving T2 and T3 cities. In the next 2 or 3 years, our focus will be on T2, T3 cities. So India is a vast country, If we have to cover the entire India, then we have to have funds like 3M and Shofu. With this type of small company, we have to have very, stringent expenditure policy on marketing, and that is even with that kind of funds, we are able to generate good growth rate.
Got it, definitely. And just another question on the employee cost. This quarter, again, we don't have the number for this same quarter last year, but employee cost quarter on quarter has increased very significantly. So is that a one-off, or is it due to the new facility that, some expenses have been front-loaded, or if you could just throw some light on the employee cost this quarter?
Mr. Nawaz will give the reply to this query.
Thank you. As far as quarter 4 is concerned for the FY 2022, there are a couple of reasons why the employee benefit cost has increased. First is that since this company has just listed this year itself, in the financial year 2022, so initially we were making the provision at the year end only in terms of employee benefits, say bonus, incentives, etc. So for the financial year 21-22 also, what we did, we provide for those expenditures in the last quarter. So this is one of the reasons why there is an increase in employee benefits cost. And second, there were certain incentives which were given to the employees who are in marketing. So their incentives as a state promotion for their purpose, that was also accrued during the fourth quarter. This is the main reason. And second is that since we are going for an expensive spree, and in the third quarter for the current financial, that is FY23, we are going to start the production in terms of expansion unit as well as for the diversification, the research and development also. So for all these three aspects, we have started employing new persons, new skilled persons, and manual persons, so that as and when our production is processed, so then we can utilize their services, and the sales could happen in at that point of time only. So these are the multiple reasons why the employee cost has increased during the fourth quarter. Thank you.
Thank you, Mr. Zaveri. We request that you return to the question queue for follow-up questions. The next question is from the line of Pranay Jain from Dealwell Capital. Please go ahead.
Thank you for the opportunity again. I just wanted to understand how much of our raw materials do we import, and what is our backward integration level presently?
Around 30% of the raw material is imported, and rest is from the local suppliers, manufacturers.
So significant part of the imports would come from China, or
imports are mainly from Europe and USA. China is only for some packaging material, but all raw materials are coming from European countries and from USA. So that is the 30% of our import is raw material is approximately around 30% is the import, and the rest is sourced from the Indian suppliers.
Okay, and from the capex that we are going to complete this year, what is the kind of asset turnover that we can look forward to, say, in FY24 at optimum utilization? What is the kind of contribution that can be expected? Any view on this year, or most importantly next year?
Mr. Nawaz will give the reply. Thank you. As far as the asset turnover is concerned, if you go through the results, you will see that the asset turnover of the company has bettered this financial year. Say, in the last year, the asset turnover ratio was 5.50, whereas for the financial year 21-22, just completed financial year, is the 5.91. Say, now we have increased the turnover with the same volume of quantity of quantum of our fixed assets, but in the coming year, not now, but in the coming couple of years, no doubt our asset turnover ratio will be low. But we are very confident that with the increase in turnover, we will be able to achieve this current asset turnover ratio in a couple of years, say within a period of 3 to 4 years.
So of the present assets and facilities that we have, what is the utilization rate as of Q4 close, and what is the expectation of the same assets in FY23 and 24?
What we are going to do is see the asset turnover utilization. First of all, I will apply with the asset utilization. As far as asset utilization is concerned, we are expanding more in three parameters. First, we are expanding our existing units. First, second, we are going for the diversification with a couple of new products. And third, we are developing a very state-of-the-art research and development unit. So, in these right now, we are utilizing our assets which are put to use. They are effectively used and to their maximum extent. Now, to maximum extent, we can have so we are working now at a capacity of say 80% of the already installed fixed assets. Now, coming to the expansion program, if we go for the expansion, then the turnover asset utilization will not be at such a magnitude, but initially it will be a low level, but gradually with the increase in our revenues, increasing the business, the way we are going for the different countries, we are getting the sanctions approvals from the various, say, for instance, from the USA and other countries. The turnover will increase. And we are very hopeful that the asset turnover that is at present we are working at will be achieved within 3 to 4 years.
Okay, just to understand this clearly, you said 80% I heard somewhere. So existing facilities, and I'm talking about production facilities right now, you believe that can improve to, let's say, 90% this year and maybe 100% next year? Is that what
yes. Initially, I told you that we are going for the diversification as well as the expansion. This 80%, your question relates to the expansion, right? Existing unit, with the existing plant and machinery, we are working at 80%. But when we get to the expansion, the capacity utilization will decrease. But when the sales will increase, since we have a much investment plant and machinery will be higher. And we have a more machinery in terms of value. So our utilization, we have a much higher capacity, installed capacity, but the utilization for the couple of years will be low, since we have a higher installed capacity as compared to current installed capacity.
Thank you, Mr. Jain. We request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Dhruv from Jairam Stockbrokers. Please go ahead.
Thank you for the opportunity, and I would like to congratulate the management for the good set of numbers. My first question is, can you just comment on the revenue contribution by the top products of our company?
The top products we have total more than 120 products at present. Out of that,
yes, top 10 products.
So out of that, the top 10 products are contributing to 20% of our total revenue. Approximately in the range of 20 to 22% of the revenue is coming from those top 10 products, and the rest of the revenue is spread over the remaining around 110 products.
Okay. And in the investor presentation, you have mentioned that you have 5 patents for 2 products. So which will be those 2 products?
Also, I didn't get your question, please. Can you repeat?
You have mentioned that you have received 2 patents. So for which products have you received those patents?
Oh, we have filed 1 patent. We have not received any approved patent. Is not yet granted. We have filed patent for 1 product, and that product is in great demand, and we are expecting the patent to be granted to us in the next few months, because it is in the review stage. So once the review is finalized, it is approved, then we will be this product will be in a better position to sell, and it will be another top-selling product for our company.
Okay. Thank you. Thank you so much, and all the best for the future.
Thank you so much.
Thank you. The next question is from the line of Nitin Ratilal Mehta from Twin Earth Securities. Please go ahead.
Yeah, thank you, and congratulations, Mr. Modi, for your excellent performance.
Thank you.
First question is, you mentioned that you're working only on the one shift, and one of the participants did inquire about the growth. What stops us from increasing the production from one shift to, say, second shift to start with, and maybe the third shift?
There is nothing stopping us. It all depends on the orders. When the orders increase, we can operate, and sometimes we already operate at an extended shift. So it is all depends. The kind of order position we have at present, we are sufficiently, sufficient for one shift operation. And as soon as the orders increase, we can extend our shift, and we can operate the second shift, and if required, we can operate the third shift.
Sure.
There is no problem. Nothing is stopping us. We are only just because as the business is growing, our production will also grow, and if we cannot fulfill the production in one shift, then we will extend the shift from 8 hours to 12 hours. And even after that, we can have two shifts, from 8 hours, two shifts, and like that, we can utilize the capacity on single, extended 1.5 and 2 shifts basis. So that means we have enough capacity at the moment for the existing production.
Yeah, lovely. The second question is, what is the competition in terms of manufacturing from within India?
India, there are few manufacturers, but they are not in organized sector. And there is no single company in India which is manufacturing such a vast range of dental products in one factory. So there are companies, small companies. Some companies are making, 20 products. The other company is making another 20 products. But our company is the only company in the organized sector which has, complete quality management system, which has got all quality certifications, international certifications. We are the only company which has got the FDA, clearance, US FDA clearance for few products. We have all of our products cleared by Saudi FDA. We got the MDSAT certificate. So this is the only company in India which is in the organized sector and professionally managed. So we don't see any competition from the Indian manufacturer. Our major competition is the multinational companies who have a history of more than 100 years. One of our investor friend was just talking about a company, Shofu. Shofu has just celebrated 100 years of their existence. So we are fighting, we are competing with the companies, Japanese companies, US-based companies, German companies who have a history of more than 100 years. Yeah. So our company is comparatively much young. We are just 22 years old. So compared to these companies, we are quite young and energetic, and we are, we can beat them in India.
Excellent.
We are trying our best to beat them.
Yeah, super. So in that case, are there any possibilities, the two questions coming out of your reply? One is, what are the possibilities of we as a Prevest Denpro acquiring some of the companies which are in the unorganized sector which may complement us?
I'm not able to believe it.
Sir, your audio is breaking. Please check.
Are you telling me? I'm Nitin Mehta here.
Sir, from the management line.
Yes.
The audio is breaking, sir. Mr. Modi, am I audible?
Hello? Hello?
Ladies and gentlemen, please stay connected while we reconnect the management line. Thank you.
Okay.
Ladies and gentlemen, the line for the management is reconnected. Thank you, and over to you, sir.
Am I audible?
Yeah, I can hear you now.
Yeah. Is it necessary for me to repeat the question or?
Yes, please. I couldn't understand your question at all.
Okay. What I was asking is that from your reply earlier, what are the possibilities of we as a Prevest Denpro acquiring some of the companies in the unorganized sector to complement our product range and merge with our company?
See, there is no company in India which is worth acquiring because they don't have any market value. Their market share is very low, and there is no point of acquiring those companies because they are not having any quality factory. They don't have any brand value. So there is no point of acquiring Indian company at present in our field. We don't see that opportunity at all, because the company level of those companies is not sufficient. It's not good for adding value to our business. So we are not considering that option at all.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as a last question. I would now like to hand the conference over to Ms. Asta Jain for closing comments.
On behalf of Hem Securities Limited, I thank Prevest Denpro team for giving us detailed insight on the results and the time we spent on this call. I would also like to thank all the participants for joining this call. Now, I would like to hand over to the moderator.
Thank you. Ladies and gentlemen, on behalf of Hem Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.